What's up, guys? What's happening? Let me get the levels right. Music. So we are on a Friday afternoon, or a Friday candle close approaching next hour, and then we got the Saturday candle. So how was this week? How was the last 5 days? Monday, Tuesday, Wednesday, Thursday. This Tuesday, Wednesday, Thursday, damn, like that was a grind. That was a squeeze. Very flat and boring, not a whole lot going on. But now we've had this Friday candle pop, and we've popped out of this downtrend that we've had. Beautiful downtrend. Correction, you know, and enabling people to get back into some positions and build up perhaps to altcoins that they wanted to pick more up of at a discount. Not saying that this correction's over, I'm just saying this is the start of, you know, a dollar cost averaging approach. You can, you know, if you're looking to build up the positions that you do have, you want the dips. Like, these are the discounts that you look for in a bull trend. These are the discounts. So yeah, that is a really nice falling wedge type breakout. Like, if you want to class this as a falling wedge, this sort of part here, it's done a nice pop back up, just as your rising wedges are a breakdown. Like, let's see if I can find a rising wedge that caused a breakdown. This was kind of looking like one over here. The way that was shaping up, you know, you had this kind of failure through that rising wedge. Yeah, there's a lot of them. There's one here too, kinda. I mean, that was more of a bit of a flatter top, but yeah, you get the gist of it. When you get price like sort of grinding higher, and it's not really progressing much to the upside, then you're likely to come down and correct. Just like when you're grinding down, but you're not really progressing anywhere down, it's, you know, there's a grind here, a drop, a grind, a drop, a grind, but then pop up. It's like it's not a guarantee, but it's a high likelihood that you pop in the other direction. Okay, so seeing Bitcoin up 5% for the day, that's really good. It's gone up $2,000 in the space of, let's see, how many hours was this to get from there to there? It basically did it in 9 hours. 9 hours, very nice. So let's check the oscillators to begin with. Let's start from the weekly, and I'm gonna take some of these lines off just so we can see what's happening. We'll get rid of the logarithmic view. We'll just go linear. So let's open the oscillators. By the way, if you have a TradingView subscription, you can save these indicator layouts as little favorites, and they can be up here. You can see I've got 0 is my all clean button, so it just gets rid of everything. Then I've got a 10 and 20 EMA cross, a 20 and 200 EMA cross with a Ishimoku cloud. I've got a 50 and a 200 EMA and SMA, so that's like where you get your death cross and golden cross. And then I've got my crypto down under strategy, which I haven't looked at in a while. What else have I got? My oscillators, so I've got MACD, RSI, stochastic RSI, which I'll look at right now. Then I've got an Ishimoku scalping strategy by Serrano, and then Fu Manchu, which is like these ones, these cipher indicator A and B. Okay, let's go back to the oscillators. Now, the way to do that, by the way, if you have a paid, like even just the lowest paid version of TradingView, you can grab an indicator. Let's say you set it up. You open up this little window here, indicator templates or templates. Open that up. and say save indicator template. And what that'll do is it'll put it in the list. So something that I don't have in the list here is an MFI. Like this is a indicated template that I have saved, but I don't have it favorited. See the little star here? This star, add to favorites, is what puts it up here in the list. So if I click on M now, I can get my money flow indicators to show, you know, what's happening on the weekly. So right now the money flow is suggesting that there's a top that's been met, which we are very aware of, and that money's flowing back down. So yeah, that's something to be aware of. Now, obviously, just with that example, when you get a money flow indicator topping out like that and it's suggesting a sell, it doesn't necessarily mean that the trend is over. Because look what happened here. We had money flow telling you to sell all through this section here. But we kicked up another, how many percent's that? Another 121% after that. So that money flow is not a one-size-fits-all indicator. It doesn't give you the complete picture. It's only just a snapshot of what the money flow is doing. So yeah, look at all that. That was, I mean, this is a sign of divergence. You got money flow going down, but price going up. So the flow of money was definitely coming in, but there were suppression games going on. We know that it was Wyckoff distributed in that area. Anyway, I'm diverging. I'm digressing. I'm diverging. I'm getting off track. Okay, so let's go back to the oscillators. Let's jump on the weekly. What is the weekly saying? Let's circle some moments here. Or let's look at this chart, because this chart will have more to talk about. Okay. And I'll be able to draw on it without bringing up all the lines. So on the weekly time frame, we've got the MACD threatening to cross down. So that's kind of scary. We've got the RSI has been overbought and it's crossed back into the band here of like to get neutral, basically, to reset. But keep in mind, this is the weekly time frame. We've got the stochastic RSI. Now, this is the sensitive, fast-moving oscillator. This is coming down, and what's the likely behavior once that bottoms out? It tends to find a low and then rip back up again. So it oscillates. Stochastic is interesting like that. So from here, let's go down to the daily. So we know that the weekly looks kind of cooked right now. It looks like it wants to head down. It's got a little bit more room to head down on the stochastic RSI. But remember, oscillators aren't, the price doesn't follow the oscillators follow the price. So the price will go where it wants to go. If it starts rocketing up from here, the oscillators will have to follow that to a degree, right? They're going to have to reflect that move. Let's see. Okay, let's jump to the daily. Let's see what the daily's saying. Okay, there has been a beautiful reset on the daily chart. This time frame's a little bit more sensitive to, obviously, to what's happened in the last couple of weeks or last week or so. So we've had the MACD line coming really, like, this is a nice plunge back under the histogram. It's similar to this, right? We've had this plunge. And then what happens once the MACD goes down here and gets a cross above the signal line? That is a classic MACD buy area. So that would have been over here, for an example, right? It took a while, but the MACD did climb. It got back above the histogram, so that you can see the price was rising along with it. You had another dip. However, the MACD stayed above the histogram, crossed again, and then, you know, the rest is history. We had that ETF rally. What did the RSI was similar. Look how dipped the RSI was. It got oversold. This is a really good thing on the daily chart. If your daily RSI, if it goes oversold, you know that you're in a discount. You know that it's in a good region, especially during a bull market, during an uptrend, like a bull market uptrend. You know historically that RSI going that deep is a good buy zone. It's a good starting place anyway. We had a nice one at the FTX drop. That was the last, or the second last significant RSI dip on the daily, was the huge sell-off during the FTX disaster. We almost, well, we kind of did, technically got oversold during the Silicon Valley Bank being shut down, or basically the bank run on Silicon Valley. There was that banking sort of scare, which caused this in Bitcoin, this drop. What else was there? There was the debt ceiling crisis situation. This is what caused this section on Bitcoin. So to go from 31 down to 25K, this was the debt ceiling FUD. This was the Silicon Valley FUD. Drop, drop. There's FTX drop. FTX. These are all these FUD events. Now this one here, I think there was just like regulatory fear from the SEC. There were, I think, I'm not sure whether Grayscale was in court with the SEC at this point or whether that was later on. But anyway, there was this another round of, or bout of, indecision and fear going on. We revisited 25K but found support. So that was a big double bottom. And then you can see that reflected on the RSI. Like, look at that. Oversold. Way oversold in this region. So right now, you're looking, okay, where's the next? We've come up really beautifully. Like, this reflects the optimism of the ETF, right? We got really overbought up here. That's this part here of the chart. That's, you know, that's exuberance right there. Not only that, we came up, did an ascending triangle and got another push. Just like as we're leading up to the ETF thing. Look at the divergence. Look at that bearish divergence. You're getting lower highs on RSI all the way down here. All this section was bearish divergent. See that? You've got lower highs on oscillator, higher highs on price, divergent. So this correction was very natural to see that happen after a whole bunch of divergences set in. So now the question is, was this drop, was this correction enough to reset the divergence, to basically, you know, pay the dues of the divergence, the bearish divergence? And I think, yeah, it's quite possible that was, you know, we could see another set of resistance up here, like somewhere at the 50%. So if you take the entire move top to bottom here, roughly here would be your 50% retracement zone without drawing a fib. You get a rejection off the 50 and you come down further. That would give the oscillator, the RSI, a chance to come down into the oversold region. Maybe that's how we get our dip to like 35K, or even the high, the low 30s, even to 30, right? Which is these highs from before, from last year. So that, I can see that being a possibility, like the big old head and shoulders. Head, right shoulder. Definitely got the left shoulder in the head. We're waiting to see if this is going to become a right shoulder, or I still don't want to rule out that this could be the start of, you know, a grind back to these highs, back to the top of the range. And then maybe by the time that happens, we're sort of leading into February. You know, we're into Feb, and maybe we attack the highs and we continue the rally. This, because we're on a big trend here. Like this seems to be like a big parabola, or it's at least a bull trend, right? So that's what the daily's kind of singing out. I think the daily, the dip that we've had, this 20% dip in our bull trend, has been deep. Like that's a pretty significant drop. That's 20%. It's come down $10,500 basically. That's nothing small. That's a big deal. Have we seen that before in huge uptrends? And yes, we have. Look at this. This was the bull trend from 2020. Let me just remove all the indicators here. So what are some other sizable dips that we've had? There was one here. That was a 20%er. There was one here as well, which was an 11. There was this kind of stalling for, it was only a couple of days, but that's 10%. This was even just here, there was one here too, 20% dip. Another huge one here, 30% dip. And you can see it did not stop this bull market. These dips, these savage dips, 19, 11, 10, 20, 30, these pullbacks aren't uncommon in an uptrend. So we'll go back to this one as well. Like, look, if I just highlight this entire bull run, this was the bear market low of 2015. Then we had a double bottom later in 2015 as well. So bear market low, revisiting the low, and then we got the ball rolling into the halving. Look at the volatility around the halving here. If I zoom in on that, you'll see that even before and leading up to and after the halving, it's still volatile. Like, there's still savage moves down in that section. Let's zoom in on that. Look at the size of this correction right before the halving. This was a 30%, basically, 29.6% correction. Post-halving, you had price fell off a shelf and went down another 28% from that point. So two savage moves down before and after the halving right there. Look at this huge giant correction here. Like, this is a big deal as well. This is a 35%, 34. Here, like, you get the point, right? It's not uncommon for crypto to see really big volatile drops. The one we've had so far has been 20%. This is a 40% correction. This took days. This is weeks to play out here. It's like almost 2 months. June and July, all of that was quite savage. It started picking up in July. But yeah, you get the point, right? Every uptrend has pullbacks, just like every downtrend has rallies, like, you know, moments where it goes up. So in the bear market, we saw rallies up, you know, some grinding up, really big day there. Optimism through here, up, another optimistic moment there. Like, so even in a bear trend, you get rallies, you get things, but the point of a bear trend is that these rallies do not recover the larger picture, the broader picture, right? You're getting lower and lower each time, lower highs, which is the hallmarks of a bear market. Lower high here. That was the last lower high. Now, when you broke structure, when you got higher than the last high, that was when we should have started paying attention. That was 18,000. This is the moment where it was like, okay, we've changed character here. We're starting to break structure back to the upside. We're finding support on top of the old high. You know, this is a big deal. This is when we know that there was the pivot, the inverse head and shoulders was definitely on the cards there. You know, that was signaling, it was marking the bottom. And then the rest is, you know, 2023, as you know, history of the recovery that we're in. So structurally speaking, where are we at? Let's look at the structure. So we got an up move, a down move, an up, a down, an up, a down, an up, a down. And then right now we're trying to continue the trend. That's what it seems to be for me. Like, and this is higher time frame, right? This is the higher time frame trend that we're seemingly trying to establish. Let me just go through the chat here. What's up, D Johnny, D Buddy? We got Philip, Django, Brandy. What's up? Hello, Seattle. Much love. American Crypto Monster. What's up, dude? I think we'll go lower. 32 is my guess. Yeah, that's cool. Yep, I think it's still on the cards. I think it could very much, you know, be something like these. So we met a high, we had a point of exuberance, and we grinded down. There were moments of optimism, like, that tried to come in, but overall we ground back down. So you could get something like that, sure. We'll just have to see how it pans out, but either way you cut it, I am not concerned one bit. Like I'm really not concerned about losing what we've spent all of last year building into the halving, by the way, which is a bullish headwind, right? Let me go back to my plan as well, because I think we talked about that in the previous 2 streams. We have a plan. So the plan is, if support is held, great. We have some kind of exposure if you've got a position up in this area. So really, we're still kind of at this stage where we're holding support. Yes, there was a bit of movement below it, and you could have bought there, like you could have started your averaging. My heavy buy zone would be if price comes down between, you know what, this should be a little higher, like in hindsight, now that I'm looking at it. I should expand this to about 35k, all the way down to like, I think 29's a bit deep, maybe like, let's just say 30. Between 30 and 35 is a very much a buy zone. Let's go 35,000. Okay. I know I'm moving the goalposts a little, but this is still, I think this is still sensible. Let me change this up. Pump it out. So, well, these brushes, I think that's it. Delete. Call this the buy zone. Cool. Chuck that into the plan. So, realistically, this sort of area between the support that I'm drawing out and the start of the buy zone is kind of like dead air. Like it's, you know, I'm not really suggesting any action be taken in that spot, but from a dollar cost averaging perspective, let's say you have X amount of dollars that you want to get into Bitcoin or into your altcoins. Just treat it like this, like dollar cost average it, you know? 1 here, 2 here, 3 at this level, 6 at this level, you know, like you buy heavy in the buy zone, right? That's the point of dollar cost averaging. Then your average is somewhere closer to the better prices, right? As it comes down, as it dips, if it dips, right? So, was there something else I wanted to talk about? Yes. Let's hide the plan. Let's go back to the weekly. And I've got a couple of things I wanted to point out. Weekly chart. Check out these candles on the weekly that I've circled. Look at what they are. This is a hammer. That's a bull hammer. It depicted a turning point, a pivot. We got 2 days left still, so it's early to call it, but this candle, if we stay roughly up in this region or a little higher, this could turn up to be a really big hammer, a really big weekly hammer, which is a pivot candle, right? That's on the weekly chart, so that could produce a move up for a week or two, back to visit the highs. Like we don't know. Another thing I want to do is get that Fib retracement and see how we're tracking with that on the current. This is the current move from the high to the low. We're trying to see where we belong in that. What is it now? We've got half an hour basically until the daily close. Let's go down to the hourly chart and let's get a fib retracement. So from $49,000, roughly, that was our high, traced all the way down to the lowest point so far. This is our fib journey back to that high. Very common spots to find resistance are the 0.5 Fibonacci level, and then the 618 and 65 pocket. So this is the golden pocket right here, in here, somewhere in there. So realistically, somewhere in this box, you would expect to find some kind of like lower high. That's the scenario for the bear, like, the continuation of this correction. Maybe we rally up into it like this, like we get up and then hit a high, hit a resistance, and then trend back down, and that's how we start the journey down to the low 30s or the mid 30s potentially. Or it may not even get up that high. Maybe we find resistance at a swing fail. This could be interesting. This is actually quite a possible and probable scenario. See this high that I'm looking at over here? If you trace that across, this would be a swing failure. If we test the 0.5 fib, which is just above the previous high here, that would be a classic swing fail rejection right there. And then, drop off back down. That could be a very possible scenario, which would print in the lower high, right? Like the head and shoulders, which throw us down. We'll see. Don't want to get too far ahead of myself there with that, but that's a possibility, right? So yeah, I think this is the most significant up move that we've just had in the last 12 hours. This up move has been the most significant rally since the $49,000 high. So that's a big deal. That could suggest that this is a bottom for now. This is the bottom we're dealing with. This is why I have this fib retracement up. So it's just a matter of, can we beat the resistance? Can we beat it and get back on track with the uptrend? Or is it too soon? Do we need more time to cool back off and build up more support? That's the big question at the moment. So just that question is the same question that people were asking back here. Same question, right? We hit a high, we got a little bit higher than the high, then we retraced. The question here in this moment, when we didn't know what was happening over here, we didn't know all this. The question at the time, I'm sure, was, is that it? Like, is this all we got? Have we pushed up to just like 9K? And are we due to come down now? Like, look at this red candle. That was a big, nasty day. But look, the supports were held. This is kind of like what could be happening right now with the 40K level, right? The support is holding. It held, and then, you got this next leg, which no one was really calling for at this time. People were probably still fearful and suggesting that this was just some relief bounce and that we were due to come back down again, So just be careful of your expectations about downside and also upside. Don't get too comfortable in either direction. Have a plan. My plan at the moment is, if we do come down, obviously, if I bring back my plan, is that we have a buy zone. We have something in mind. We have buys in mind. And I'm sure a lot of the market does too. If you look at the order books for Bitcoin, I bet you there's a whole lot of volume sitting on the books waiting to get picked up, waiting to catch the next dip before, the continuation after the halving. So that's the way I see it. But I don't want to get too caught up in that theory, because it is just a theory. It's just a speculation about what will happen. Because for all we know, we might get this, which isn't as popular at the moment, to suggest that that was the bottom and that we continue. That's not as popular, that theory. This is more popular at the moment, talking about this. You know why it's popular? Because people want to get in. People want a discount so they can make their position for the pending bull market bigger. They want to. I think that's the scenario. Will the market give them that opportunity? Maybe not. I think if we go back to the weekly, let me go back to the weekly chart. Let's zoom in on the weekly candle. Look at the tail on that thing. This is buy pressure, guys. Just like this was sell pressure, big tall wick on top, this is depicting buy pressure. There's a lot of demand has been stepping in to pick this back up above 40,000. We're back to basically 42k. We've seen 42k. So right now there's like an arm wrestle going on. Like, you know, who's gonna are we going in for the discounts? Do we get the chance to make our positions bigger for what is the bull trend and the bull market likely? Or is this all we get? Is this the biggest discount that the market can afford at the moment? Think about what has to happen to throw Bitcoin down there. You have to have whales willing to sell and part with their Bitcoin to cause that correction down to 30. You know, is there enough Bitcoin? Is there enough people willing to part with it? As it stands right now, no, because we're not down there right now. Like, they're not parting with what they have. Maybe there's too much anticipation for this, the halving, right? There's too much anticipation potentially, and that's why we're holding ground here. You know, that's why we may hold ground and then rally up after halving, you know? Just an idea. Keep your mind open. Keep your mind open to both scenarios, about both outcomes, and take a 50-50 approach. If you're not sure of up or down, that means you're 50-50. You're on the fence, right? So what do you do with your money if you're 50-50? Put half of it in. Put half dip your leg into the market. This way, if you do go up, at least you're half in. Now, if you go down from here, it's okay. You've still got 50 to deploy at the next low, and then you're somewhere living in the middle, you know, to catch the bounce. So the 50-50 approach, this is more of like an investment approach, you know, like if you're trying to ladder into to build the position for the overall cycle play. Trading's different. I'm not talking trading. This is not intraday strategy. If you're on leverage, especially, you're not thinking about 50-50. You're thinking of stop losses, right? With trading, you don't want to mess with dollar cost averaging. You want to really know where you stand with trading's very complicated. Trading's a lot more difficult and riskier than doing these big swing positions, which is what I'm doing. I'm doing a bit more of a swing play, like a cycle play. So I'm not stressing too hard about this current pullback. But if you're trading, yeah, like this can be serious if you're just swing trading, right? Okay, what do we got? Like 26 people in the stream. What's up, guys? Smash up the like button if you haven't already. I want to start going through some altcoins as well. We'll have a look at some. So I think I was watching a video before highlighting what kind of coins have real big potential to rocket, like what shit coins have potential. And Rocky and Myro are both meme coins that are fairly new to the market, right? Myro has only been listed on Bybit for like a few days now. Let me just go into, because I've started a meme list here. I've got Bonk, Cash Tree, Myro, Silly, Trump 2024, Rocky. Like there's a lot of new ones that are in this meme category, like this moonshot type volatile category. So you got to be careful with it. But let's look at Myro. This is Myro on MEXC on spot. You can see it's already had a big run. Myro and Rocky are both Solana DOGE coins. So the founders of Solana have pets. They have dogs. One of the pets is Myro. The other one is Rocky. If you look at the history of like the story behind this Myro and Rocky, Rocky hasn't really moved up yet. It's just been dumped since it came out. Like, yes, there was a pump, like there was a dump then a pump, but now it's like it's basically trying to find support. There is evidence of like a double bottom here for Rocky. Let me open up I'll open up CoinMarketCap and I'll show you the size of Rocky. It is so small. It's very small. Let's open Rocky. You can see I've been looking at it in my recent searches. So Rocky is only $4.5 million market cap. Its position is 2,442 in the market cap list. So when did it come out? It came out the 13th of December last year. So it's only fresh on the block. It's had a little pump. It's come back to that these lows. It is not really on any central exchanges except for CoinEx and Bitmart right now. Two central. If this gets listed on Bybit or MEXC, Rocky could see a really good rally because it's only $4.5 million. Let's see what Myro's worth. Myro, does it have pumpability? We know that it's kind of pumped already. If we go to all, like, see how we've had this like kind of big move up. Not suggesting that it's over, but it's not looking great. It looks like it's been correcting some over the last few days, the last couple of days. But it's 151.5 million compared to Rocky's 4.5. So this thing, these came out roughly the same time, I think. Like, yeah, 11th of December. Oh, sorry, that's the 12th of November. Yeah. So it had a bit more time, Myro. Rocky came out a bit more over here, like in this area. But either way you cut it. Myro is available on, this is the difference. Myro is available on all these central exchanges. So that's why it's probably grown a lot more. It's had the opportunity to grow, which means Rocky, if Rocky gets some central exchange listing, if this list grows for Rocky, you could see the growth into the market cap get bigger. Like, you know, if Myro can get up 151 million, then Rocky certainly could grow a hell of a lot. 151 million, so it's not even a billion yet. Like this, that's how it's ranked 268. That's pretty good. It's not bad for a shitcoin. But yeah, Rocky's definitely got more potential at the moment for growth. I'm not saying that it's gonna. I'm just saying the room ahead is higher. There's more room above it. So what's the other one? Cash Tree. Cash Tree. This is another shitcoin that is available on Bybit, and it is only $1.5 million. $1.5 million market cap. Has it pumped in the past? Yes, there was a pump. What was the market cap at that point? Where did it get up to? $15 million. So it's seen some action already. Like it, you know, back in December, early December, Cash Tree CTT has seen a pump. What size is Hex? Someone's saying do Hex. I don't even know if Hex is available on a lot of central exchanges. I think it's still like a DeFi thing, right? Let me see. Central exchanges. Okay, it's on BitGet and MEXC. Okay, Poloniex. There's the list. I can't use it because I'm mostly doing Bybit. I do have a MEXC account, but I don't really mess with MEXC too much. It's been out since 2020. Obviously, it's had a big run. It's down on the floor. Could it move again? Yeah, sure. You could see a pretty spectacular rally. It's not even 1 cent right now. It's below 1 cent. It's 0.008. So it's close to 1 cent. It's 80% of the way to 1 cent, 85%. So that could drop a zero. And yeah, like it's got a lot of potential. Hex got up real high in the bull market. But dude, look at that collapse. Totally, like right back down to where it begun. Right back down to these levels below a cent. Alright. That's Hex if you're a Hexican. Hex crazy. What else was I going to show you? Oh yeah. So you know Crypto Bubbles, you know Crypto Banter. Crypto Banter's the YouTube channel. They have a Banter Bubbles webpage. Like you can visit banterbubbles.com. And if you hit hot narratives, they've got all of these ecosystems. So you've got, you know, the Solana ecosystem, centralized exchange ecosystem. So if you click into the central exchange ecosystem, you see, you know, there's BNB. So there's Binance, there's KuCoin, BMEX is, I'm not sure, is that BitMEX? I don't know which. FTT's FTX token. Yeah. BGB's BitGet. HT is maybe Huobi or HitBTC. But you get the point. Like it shows you all of these the growth in each of these exchanges. Let's go back a step. What are the other narratives? What have they got in their meme? So there's metaverse, there's AI. Where's the meme? Memes up here. So these are how the memes are tracking. Turbo's having a good, is this daily? Yeah, daily performance. Let's go hourly for the memes. Narratives, memes. Oh, I have to click filter, that's right. Filter's on the side here, so you go meme by performance in the 5 minutes. In the last 5 minutes for the meme coins, or these meme coins at least, this is what's been happening. This one's interesting. Bitcoin, Harry Potter, Obama, Sonic 10 in you. Ridiculous. The ticker is Bitcoin. Anyway, there's Myro. There's that coin that I was talking about, Myro. So that's been correcting a lot. I'm not sure that they even have, they're not even talking about Rocky yet. R-O-C-K-Y, Rocky. They've got Bonk in here. Yeah, you get the idea. So if we go, let's see, let me open up that filter again. We'll go back to memes. And we'll get like the yearly. These are the coins that have done, you know, this level of performance for this. I'm wondering if this is 12 months worth or whether this is just since the 1st of January this year. But yeah, poor old Doge. Doge hasn't even seen any action yet, really, in the bigger scheme of things. Anyway, yeah, that's Banter Bubbles. What other ecosystems? What other narratives are there? AI coins. What other narratives? AIs, layer ones. So like, you know, Ethereum, Bitcoin, Solana, Injective, that kind of thing. These are all the layer ones. So I think now is this is yearly. Bitcoin's moved up 81%, yeah, so this is definitely a 12-month reading. But this KAS, and Alpha, and Quanx, like I haven't even heard of this one. I like Injective. Quan platform, QAN platform, coin ranking 678th. Interesting. Alphium, 291st. Okay. So I haven't really heard of those two layer ones before. Not sure what they're about. I'd have to research into them. Casper's done well. Solana. Obviously Bitcoin. Cool. All right, let's go back to the charts. I want to see what's happening. So we're approaching the daily. This is the Rocky chart. Oh yeah, by the way, there was something that happened recently on the calendar. So if we look at our economic calendar, look at that GDP result for Q4 of last year. The forecast was 2%. It came in at 3.3. That's a really big positive result for GDP. This means that there is no recession on the cards. If this was negative, this figure's negative, that's when you can start talking about a possible recession. But this is positive. We are positive. There is no recession right now. I don't know why people are even talking about recessions right now. Like, it's not even in front of us. So, you know, until we get a negative quarter, we shouldn't even be thinking recession. You know, anyway, that's another story. Let me find a website that I was on recently that shows the GDP performance, the economic behavior for the US. Oh, it's not that. Maybe this is the US one. Anyway, look, I know I posted them in a different Discord, so posted these GDP charts. Oh, it's gonna take forever to find them. I'll just search by my name, actually. Or you say user, Rick, or from Rick or something. Here we go. Okay. Now we're talking. Okay, here we go. This is what I wanted to show. Look at this. So this was Q1 and Q2 of 2022. We know that 2022 was our bear market. This reflects why we had a bear market. Two negative, it's like a piece of the puzzle, right? The second half of 2022, even though we were still in a bear market, we had some positive quarters there. Q3 and Q4 of 2022 was good. We found the bottom. 2023 was a really good recovery year. Look at the results, 2.2. There's our recent result of 3.3. So you see that our GDP is healthy right now in the US. Nothing concerning, right? Should not be worried right now about, you know, recessions. But you got people will always warn of recession at any time of the decade, any time, any moment. You're always going to find people that are like fearful of a recession. That's just the way it goes. So you can either choose to listen to them and live in fear and never get into any positions because you're worried about a recession, or you can just get on with it and use the information in front of us. You know, so don't get too caught up in the fear that gets peddled out there. Here is what I'm trying to show. Let me get back to you guys. I'll put it in the chat. So this is the GDP performance for the US. This is a 3-year look. This is a 10-year look. Let's get it. Columns. I like the columns. Look at that. That's the COVID drop there. Look at that GDP spike down, and then the recovery spike when the Federal Reserve printed all that stimulus. stimulated the economy back up. So it was like a real harsh reaction. That's what threw us into that bull cycle, 2021. And then we had a brief recession. This was a technical recession, but they didn't want to call it that, remember? They didn't want to say the R word. They didn't want to say recession at that time. But let's look at the 25-year. Like, okay, there was no recession actually in the dot-com crash. We had a negative quarter, was followed by a positive quarter, then another negative. So that was no recession. It was a bad year, but it was no recession. This was definitely a recession. This is 4 quarters in a row of negative GDP. That was the global financial crisis right there. That's the COVID dip. This was our bear market from 2022, which put us into the FTX collapsing, Terra Luna collapsing. These pressures basically uncover the bad actors, the bad players, the people that are in above their heads get washed out in the bear market. When things get tight and ugly, the people that aren't playing the game properly or are doing things against the grain or like against the public, or, like illegally, basically, they get caught out because it's lies, it's full of shit, it's fraud, it's fraudulent. All the frauds get uncovered when the tide goes out. The tide's coming in with everyone's. I'm sure there's probably a bunch of frauds right now building up into this bull market. There's going to be a lot of scamminess. There's going to be a lot of exploitation. That's just what happens when the money comes in. When money is flowing, there is opportunity, and a lot of these fraudsters and people trying to exploit people will come out of the woodwork. We know that big time with crypto. Crypto's like their playground for these people. I'm not just saying it happens in crypto, it happens in the traditional sector as well. And not all the time, they're not always frauds, they're just, playing irresponsibly. Like, I don't know, Silicon Valley Bank, they sort of got caught out. They had a lot of bad investments. They were running things very risky, and they just weren't prepared for a bank run at the time. Everyone wanted to withdraw from them. They didn't have the funds to meet those withdrawals, so they basically collapsed. They got bailed out, guys. That bank got bailed out by the Fed. The Fed helped that situation. I don't know if Silicon Valley Bank's still around. Probably not. I'm not sure. But anyway, they got bailed out. FTX didn't get bailed out. They just let that crash and burn, and they let all the people involved in FTX die with FTX. They let it. That money's gone. They're trying to recoup and sell off assets that FTX held and whatever. Try and make their customers whole in SBF's terms. But anyway, I'm sort of digressing a lot. What are we, 4 minutes out, not even, from the daily close? Let's go to the daily Bitcoin chart. What a day. This has been good. So this drop that we had on Monday, the Monday candle was savage. That was real nasty. We went down $2,000. We've got above that right now. We're sitting above that. We've got 3 minutes left of this daily candle. That is a strong candle. Not bad. That's a good start. Not saying that we're going to get thrown back into the bull run already, like the bull trend. We're not going to get back on trend just yet. I'm just saying that this is a good candle to see. It indicates there is still demand, and people are still lining up to buy Bitcoin in a big way. Look at these are the ETFs, the Bitcoin ETFs that came out. The 11 of them, they're all up 5%, 5.5% today. Awesome. That is really good. Wall Street likes to see numbers like that. They're probably used to 1% is a good day on Wall Street. You know what I mean? 5%. Dude, that's excellent. Wait till they see the proper bull market for crypto. You're going to get Wall Street FOMOing in, I reckon. I think that's going to happen. Scold me for being bullish, but I think, yeah, dude, I reckon Wall Street will come in droves. When they see the short-term potential and gains for their money, like, we haven't even started yet. They only got involved up here, Wall Street, like the ETF, people trying to play the ETFs, they've just seen a sell-off, like a sell the news event type thing. We're establishing the first low post that sell-off. Is this enough to entice them to start buying in? Or are they still on the fence and waiting for something lower, like down here or like down here to the lower high, you know? I don't know. We'll see. Tell you what, you won't get predictions from me. I'm not going to predict what's going to happen. I will admit to you, I'll just be honest, I don't know. Just like no one knows, right? I'm not going to pretend like I know and then tell you, oh, like when I'm wrong, that, oh, no, it's okay, something happened, and then backpedal. I'm just going to be honest here. I don't know what's going to happen. I'm just going to tell you what you should be thinking about as opportunity if either direction, like, you know, in the down direction, like the downside, or what you should be doing if we do go up, you know? This is why I was talking about that 50-50 thing, like 50 in here, you're half in, and then if we drop, you've still got 50 in dry powder to take advantage of a drop. If we take off from here, hey, at least you're 50% in, at least you've got something to ride into what could be the continuation of this bull trend thing, right? Into the halving. That's where I'm at. That's how I'm treating it. Not financial advice. Don't do what I say. Just anything that you hear on this channel is just food for thought. It's just things that you should add to your considerations. Ultimately, it is up to you. Like, it is your decision what you do with your money and positions and whatnot. And with that being said, not only don't listen to me for instruction, don't listen to anybody for instructions. You need to come up with your own instructions. Use this as a starting point to learn about how to develop your own outlook and sentiment and all that, you know. It is up to you to come to draw the conclusion, basically. I will not give you conclusions. I'm just giving you information to consider. That is all. That's the way it always has been on this channel and the way it always will be. But yeah, you'll hear about what I'm doing. So I don't know, I think that's pretty much all I wanted to cover. We're on track. We're still in our bull trend. Where's my other chart? Let me open up. Let's turn on. Okay, we've had the daily close. We've had our daily candle. Look at that. Beautiful. Bullish engulfing of the previous day. Big time. What does a bullish engulfing candle give you usually? Usually another green candle. That's a highly likely outcome. However, this is a Saturday, Sunday that we're in. We've just started the weekend. What happens with Bitcoin on the weekend? Usually, look, this is the last weekend. I'll circle the weekends. Actually, better than that, there is an indicator for it. It's called the weekend indicator. Weekend, Saturday, Sunday. This highlights the weekend. So the green column is Saturday, the blue column Sunday. This was interesting. This was a Sunday dump. You don't really usually expect movement on a Saturday, Sunday. Because look, Saturday, Sunday, flat. Saturday, Sunday, relatively flat. Saturday, Sunday, kind of flat. Like DOGE type shit. Yeah, this was kind of active. This Saturday, Sunday wasn't bad. But if you look at them, they're mostly flat. Like, that was bullish. This was all part of a nice run. That was cool. Kind of flat. Flat Saturday. Interesting Sunday there. Flat, crappy weekend. Crappy weekend. Okay. Not terrible. But look, most of the big moves happen Mondays and Fridays. Mondays are good for dips usually. Like, look at that Monday red. Yeah, like there's a lot of cases where Mondays can be red, like decent red candles. I really like, yeah, the start and the end of the week. Mondays are kind of, they sell off the exuberance of the Thursday, Friday, because the weekend's just a big flat indecision. Crypto doesn't want to move because they don't know what the stock market's doing. They want the stock market to lead the sentiment. I understand it. But there is a lot, like if you go back in time, you can find a lot of flat weekends. Look at that one. Look how flat that is in comparison to the weekday performance. Nice and tall, down or up, nice and tall, but Saturday, Sunday, flat. Saturday, flat as a tack right there, Saturday. Damn. Look at that Saturday, Sunday. Low, quiet. So we're heading into a weekend likely to be quiet, right? Not guaranteed, but likely. So my sort of feeling for Saturday, Sunday is maybe like this, like a bit of a stall, a squeeze perhaps. And then Monday could be a Bart Simpson. We could drop all of that progress. We really could. We could drop, come Monday, we could drop that progress back down and visit 20 to 39. It could happen. Or we get a squeeze that results in a continuation of the optimism of this candle. This is speculation. I'm speculating right now. This is guessing. I don't know. No one knows, right? Unless you're a market maker and you have the money to move the market where you want it to go, you don't know. No one will know. And even if you did, I don't think they're going to tell anyone about it. These market makers aren't like opening Twitter accounts and telling you, hey guys, by the way, on Monday I'm going to pump it into up to 40,000. Like, yeah, it just doesn't work that way. So no one knows. Get comfortable with that. You don't know the future. The sooner you've recognized that and understand it, that is where you start from. That's the best starting point. All right. Anyway, weekend. Hopefully there's some action. Don't count on it. Probably not going to stream for the weekend action. More likely to stream after the weekend, so Monday, Tuesday maybe. We'll see. We'll see if there's anything exciting to talk about, but even in this correction, it hasn't really been too much drama to talk about, because I had established the plan of support at 40k. We've got a little bit of action below it, but it's been kind of mediocre. Like, it hasn't really done anything too fantastic. But you know, maybe I'm trying to rush it. Like maybe I'm my expectations on time are a bit short. Maybe this will do the drama, but it'll happen over like a longer period of time. Like maybe we get something like that, you know, and then another, like, you know, that could happen. And that's kind of an under the radar sell-off. You know, the ones that happen under our nose, you don't really see it. Kind of like this. This was painful. This big grind down, losing $10,000 of value, but because it happened slow, it didn't feel bad. It was like a soft landing, I guess you could say. Like we eased into it. Same with this one. Like, I mean, this had drama here. That was kind of scary. This drop off a cliff, but similar. There was a grind down before that, and they do it like under the radar. Just like the exuberance here, like this was a grind up. It took forever to get. It felt like it was forever. We were just grinding and grinding, not really. It it's kind of happening under our noses, like under the radar. The pumps are what stand out. When you have really solid days, that's where you feel that the action is happening. And look, that's a hell of a candle we just had. We just closed a really nice solid green candle. Alright, I'll wrap it up there, guys. I'm waffling on, repeating the same stuff. So, have a good weekend, and I'll catch you next week, most likely. Alright, take care. Bye.